Now let's bring in my co-host, Jeff Small, and also to welcome to our show our good friend, Jon Najarian. Jon is an options trader, market analyst, and the co-founder of MarketRebellion.com. He's also author of the new book, Follow the Smart Money, along with his brother, Pete. Jon, thanks so much for being with us again on the show.
Thank you. Great to be with you guys, and great to meet Jeff as well.
Yeah, it's interesting, Jon, because we spoke right after Christmas was when you were on the show last, and of course, gosh, what a difference 3.5 months make. It's totally different world right now. So I want to divide my questions first into two categories. First of all, the economy. What are your thoughts about how bad this is going to end up being economically during this time of what I call economic stoppage due to the coronavirus?
Yeah, well, that's one of those known unknowns, if you will, David and Jeff, because we know when we go to a screeching halt and consumers are locked inside their homes for the most part, at least 90% of the country, it seems like, is locked away somewhere, that's going to impact economic activity in a way that we've never seen. It's like a hurricane hit the whole country. It's like a flood hit the whole country. I mean, everything's flat.
I know. So let me switch gears to the stock market then, because we had Mohamed Al-Arian on last week, and of course he waxed poetic about the economy part of it, but you're a market guy. So what do you think about the market where we are today? Have we seen the worst? Are the bottoms in for the market? Or do you think we might be making more new lows, if you will, as more bad news eventually filters out?
I really don't think that we're going to see worse than we've seen already. Now, obviously, we could do a double dip on the virus itself. People, could come down with a second wave. But unless that second wave is bigger than this first wave, I think we've seen the worst. And we've never seen, I'm sure Mohammed agrees, we've never seen as much stimulus, both fiscal stimulus, as well as the monetary, what the Fed is doing and what they've done is literally unprecedented, at least at the dollar levels, the $1 trillion levels that they're doing. So I think the markets are going to be reacting to that for years, actually, David. And I think the economy, especially because of the most recent Fed move, helping out small businesses and municipalities, I think that will help faster than the money from the Congress and the president.
Hey, Jon, Jeff here. Jerome Powell said today that the Fed can lend as much money as it wants under the law and what the law provides. Don't we run the risk of creating an environment where there's not going to be any growth in equities or any growth in the economy if the Fed plans to use an open checkbook to unbail us from the lack of economic activity and the disruptions that are going to occur?
Yeah. Jeff, you're absolutely right. A lot of us worry about, okay, if we're doing bailouts, number one, how do you pick and choose the winners and losers? How do you pick who survives that lifeboat ethic, if you will? In other words, are you going to let some equities fail? Equities, of course, meaning stocks. Or do you look at some companies and say, well, sorry, shareholders, you're going to get massively diluted. And if you get massively diluted and you're a shareholder of a company that happens to, is it fair? Is it balanced? Who picked who gets bailed out and who didn't? So to your point, there's a lot of those questions.
Okay, so we're having technical difficulties here, everybody. We unfortunately, this whole working from home thing is great in concept, but it's not great in concept when the internet fails and Skype fails. So my apologies. I think we have you back. We have you back now, Jon. So you cut out partway through that. If you want to finish up, we've got a minute before a commercial break. Go ahead.
Okay. I don't like the idea of the government picking winners and losers. I didn't like it in 2008, Jeff, and I don't like it now. But I think it's likely that they will have to let some companies go. And to your point, that's going to inhibit growth because people won't want to invest in companies that they perceive as dead in the water, as equity that's just vaporized and only the bondholders get paid.
I couldn't agree with you more, John. Those are great points because Main Street is detached from Wall Street right now, at least as far as fair value goes in terms of what's going to happen. You're exactly right.
Yeah, it's crazy. You know, we had this risk back in 2008 with the bailouts. Back then it was just financial institutions. You know, as I said before, John, you didn't hear me, but before you came on, I was telling Jeff on the show, I said I thought that, you know, before you know it might be 2 weeks and the Fed might come out with an announcement saying they're buying stocks, which will be really interesting. We need to take a commercial break. We'll be back in a minute. Stay with us. We'll be back with much more from Jeff Small, Jon Najarian, and yours truly right here on The Income Generation. Right now, let's bring back my co-host, Jeff Small, and our good friend, Jon Najarian, options trader, market analyst, co-founder of MarketRebellion.com, and also author of the new book, Follow the Smart Money. Jeff? So, John, you know, to build on what we were discussing earlier, you know, we're entering this new corona economy is what we've kind of coined it now because our lives are going to be completely different economically than what they were prior to this until we get a vaccine or a therapeutic that's 95% effective. What stocks or sectors do you see leading as we transition through this COVID-19 coronavirus economy? What do you think is going to be the sweet spot, the silver lining here, if there is any in this environment at this time in the markets?
Great question, Jeff. And I think a lot of it depends on exactly how much further some of the consumer discretionary plays go. I mean, we've seen how they react and how quickly they react, Jeff. For instance, the cruise lines. You know, I thought that it would take Warren Buffett or Blackstone, BlackRock, one of those big, gigantic firms to commit billions of dollars to these guys. But instead, we got the Saudi sovereign wealth fund that came in. And that sort of thing is what I'm looking for. I think we'll see retailers, consumer discretionary area that is literally flat right now, as flat as it could be, whether it's airlines, cruises, a lot of the department stores that are deemed non-essential. I think those, Jeff, are going to make massive jumps, but I think you're going to have to be selective because of the possibility that a number of them are going to experience, you know, sort of that light, that blinding white light that says maybe they're not going to survive.
Yeah, I think that's the $69 million question right now. So additionally, though, besides all of that stuff, I know options are your wheelhouse. You know, I've read your book. I watch you on CNBC discuss these things all the time. Are there any covered call strategies or any gauges you use to measure option inflows and sentiment in the market that you'd like to share with our viewership at this time? You know, if we can just keep it a little simple, though. So what would you like to tell us there, John?
Well, so right now, we talked a little bit about how when the entire markets shut down, it's very similar to a hurricane hitting the entire country. So I think that premium that the insurance company would get is exactly what you and I know, Jeff, is happening in options. The options premiums are sky high right now. Even though they've come down a little, they're still sky high. So writing those options against the stocks that you own has never been a better strategy than right now.
That's great. You know, John, I want to bring it to our viewers because, you know, our viewers are mostly doing a lot of conservative investors, a lot of investing for income, thus the term income generation. But a lot of them still want to be in the game. I've had one of my clients who's in his mid-80s who's literally called me 3 times this week because he's trying to figure out how he can be in the game and be a capitalist, if you will, and be opportunistic with some small portion of his money. So since you guys are so smart and so good with that stuff, I confess, I'm sorry, I'm going to read it this weekend. I have not read your new book quite yet, but I am going to. But I want to give you a chance to talk about what is in that book and what our viewers can get from that for the portion of their money that they really do want to use to become capitalists.
Well, And thank you very much for that, David. The what you can get out of it, folks, is that you don't have to have that full commitment to stocks. You don't have to be investing in Apple at $265 a share and buying 1,000 shares of that as a new condominium. If you have that, that's great. If you don't, I can show you plenty of ways you could invest and control that stock for less than $10,000. It's all about timing, and then it's about understanding time decay and how options work. You and Jeff are experts at that, but I think it is definitely something that investors should be looking into right now, especially during the time when you're at home with extra time on your hands. What better thing than to, for those that don't already have that skill?
Yeah, I guess if you're trying to be in the game with a little bit of your money, the options do give you the most leverage. So we only have 1 minute left, but I know a lot of people will read the book, they'll be do-it-yourselfers, they'll get into it, but then correct me if I'm wrong, but for those who read the book, learn enough about it, but still want some additional hand-holding, you have other services also that you provide, if I'm correct, to help those individuals. True?
We do, and I'd encourage you to come on over to Market Rebellion, folks. If you put in income generation, I'm sure we can get to a special deal. We have mentors, we have online classes. So thank you for mentioning it, Dave. And again, if they put in income generation as a promo code, I'm sure we can help them out.
Well, let's plan on doing that. You know, it's funny because in times like this, people realize, maybe for the first time, how risk averse they are or are not. And some people are realizing they're totally risk averse, they don't want to take any risk, and others are realizing, wait a minute, I want to be a capitalist with a little part of my money. So with that in mind, Jon, thanks so much for being back with us here on The Income Generation. We appreciate it.
Thanks, Jeff. Thanks, David.
You stay with it too.
Take care.
We have more coming up here in just a moment, right here on The Income Generation. We'll be right back.